Welcome to Winning Retirement Television. My name is Cynthia DeFazio. I'm joined today by Greg and Kristen Taylor of Legacy Retirement Group. To our viewers at home, we're going to be talking a lot about taxes today because we know that this is on the forefront of your mind. Kristen, how are you today?
I'm doing great. How are you doing?
Fantastic. Thank you so much for asking. And Greg, how are you?
I'm doing great. Yes, what a great day, and great to be a Buckeye and great to be here on the show. So I'm excited.
Yes, well, I'm wearing my red in honor of the Buckeyes.
There you go.
Can see.
All right.
So, yay. All right, I'm ready. So today's show, I know it's kind of the elephant in the room, but we have to address it, taxes. There was an article that was actually in Kiplinger's, and I wanted to ask you a little bit about this. They have some interesting advice when it comes to tax planning. They say, do what you normally do, but then be ready to do something different. So kind of a pivot there. So how are you helping people to prepare to do something different?
Well, let's think about it in reality. What is the definition of insanity? Doing the same thing over and over again.
Pause.
Had to help you out there. And expecting what?
Different results.
Different results.
Different result. So, look, I am a creature of habit.
Okay.
Through and through.
Oh, I mean, now, lately I've been on this Chick-fil-A market salad kick for lunch.
Okay.
So I'll say to the staff, I'll be back in a few minutes. I'm going to go grab some lunch. And they say, oh, you're going to go get your Chick-fil-A salad. And now when I go, they've seen me enough there. Okay, I want a market salad, no blue cheese with light Italian dressing. I mean, and sometimes a large diet lemonade.
Yep.
So that's my Chick-fil-A order. And so I'll eat that like 6 months in a row for lunch, and then all of a sudden, yeah, you know what I mean? So, but if you do the same thing and expect something different, now you have an issue. So we have to be prepared to do things differently. Mm-hmm. We really
Absolutely. And it's funny that you say that because I'm that same person. When I go to a restaurant, I find something I love, I find myself ordering it the same over and over and over. Like my husband will say, let me guess, you're getting a salad with salmon and fresh fruit wherever we go. I'm like, you're right, you're right. So that's so funny because I can relate to that. So Greg, I want to ask you a question, probably some questions that people should be asking themselves. Mm-hmm. What about with tax rates at near all-time lows? Is it prudent to continue to defer our taxes?
That's such a good question because taxes are on sale right now. As a matter of fact, we've gotten another sale with the 2024. I can't believe we're talking about 2024 changes to the tax brackets that are coming up. And so as we look at that, we can say to ourselves, all right, historically speaking, taxes are at a low spot. But we know where we stand as a country economically. True. And can we continue to keep taxes as low as they've been and be successful as a country? I think the answer to that is no. I mean, I don't see that taxes being able to stay this low is realistic. Yeah. I don't think you need a crystal ball to start being concerned about that. So as we say, okay, we recognize that, what can I do about that with my planning so that I don't have to face these unknown taxes later on? Because, Cynthia, when you and I go to a store, we talk about sale shopping all the time.
Absolutely.
We don't just throw things in our cart without looking at the price. That's just not how we run.
No.
Right?
No.
And so that's basically what you're doing when you defer your retirement dollars. Mm-hmm. You're putting things in a cart and agreeing to pay a price that you have no idea what that price is in the future.
That's for sure. And
absolutely.
How many successful people in life are constantly kicking the can down the road? Mm. Think about it. If you're successful, you're addressing things head on. You're doing something about it. Yes. You see a potential pitfall. You see a potential problem. You see a potential issue. What do? Address it. And Kristen's great about this with our everyday things that we see at our home.
Okay.
You know, the boys are annoying her. She'll call a family meeting. All right. I mean, and it's like, you get three boys, and Kristen will get the eye of the tiger, like when, okay, three of them.
That's a nice way of putting it.
Their rooms.
It's mom rage is what it is.
Okay. I love that. I love that.
I'm just being honest.
I mean, their rooms are a national disaster area, and so she calls, all the troops together. She has a little pep talk. In other words, she scathes them, and you can see the trembling and fear in these three boys.
They're like, oh no, mom's mad.
Yeah. So for them, kicking that can down the road is never a good idea.
Okay.
Yeah.
That makes perfect sense. I love that. But I can never see you getting angry. I've known you
believe
so
it.
long.
Oh, no.
Okay. So, Greg, this is another one that people should probably be asking themselves. Could converting to tax-free strategies be beneficial in the future? Converting to tax-free strategies.
So we do have the ability right now to take our tax-deferred dollars, and we have the ability to convert them to tax-free dollars.
Okay.
It's called a Roth conversion in many cases. So we can take a traditional IRA, we can convert it to a Roth IRA. Just recently, in the last several weeks, we'd sent out letters to our clients and just saying, hey, you may want to consider how much you want to contribute to a Roth conversion. Just as that friendly reminder, okay, think about how much you can afford to pay the tax on, and let's start doing it systematically year after year after year, doing those Roth conversions. And I recently met with a couple, and they came in, they saw our offer for the tax map. They came in to get their tax map, their RMD report, and they were in their mid-60s right now, and they'd saved just under $2 million in their traditional tax-deferred dollars. And so we did a nice progression as to where we thought their money could be at age 73.
Okay.
And their required minimum distributions were going to be over $100,000 at age 73.
Okay. Wow.
So I said to them, let's start converting $100,000 per year right now in these tax rates. And the husband stopped me and said, well, Greg, I don't know if I want to pay the tax on $100,000 this year. I said, well, right now we know how much the tax will be. Do you know in 7 or 8 years, when you're 73 and you have that $100,000 that's required to come out, do you know what the tax rates are going to be then? Could they be higher than they are now? And by the way, if we start converting it now, that money in the next 7 or 8 years is going to be growing tax-free. It'll never be taxed again. It doesn't count towards all sorts of other taxes that can come in, IRMA tax and Social Security tax and all these other taxes.
Sure.
So the tax map identified to them what the tax burden could be. Now we're putting together a tax strategy for this family.
I love that, because Kristen, should we rely on the government with our best interests and trust they're going to do the right thing?
Absolutely not.
Yes.
I mean, just here locally, we just had voting, and although, everyone's opinions on different matters are different, at the end of the day, if someone agreed with how everything came out, they think the government had their best interest at heart. If someone disagreed with how everything came out, they don't feel like the government had their best interest at heart. So it's even subjective from that standpoint, right? Because how you feel politically will dictate how you think the government is doing for you, right?
You're right. You're
and so
right.
not only on top of that, this stuff affects our bottom line. This affects our personal economy. So however you think politically will affect you in some way financially. And so I think it's important to realize that although, if you agree that we need bigger government and we need more tax money coming in for programs and policies and things of that nature, that's going to affect you. Doesn't matter how you feel about it politically, right?
That's true.
Because it's going to cause you to pay more in taxes. Legislation may change, rules may change. You may have something identified early on in your retirement, and oops, here we go. Now we've got to change the plan.
Yeah.
So really being cognizant of that is important for your overall retirement.
And think about it, Kristen. No matter where we lean on either side of the aisle when it comes to politics, if you look at all that's going on in Washington right now, and you start looking at it from a fiscal lens, fiscal responsibility, if you're spending trillions of dollars more
Right.
than you have coming in what reality is that sustainable?
Exactly.
Think about it. I mean, whether you think they have our best interest or not, in what reality is that sustainable without having to go to everybody else and say, we need more money?
Right.
Yeah.
And by the way, it's not the government doesn't magically have money, Cynthia.
Right.
It all comes from us.
Right.
Of course. That makes sense.
It all comes from us, whether it's through corporations or whatever. We need to make sure we're doing the right thing.
Well, Greg and Kristen, this is the very first time for us to open up the phone lines today. Would that be okay if I just went right to the
Yes.
viewers? To our viewers at home, that number to call is 614-336-7660. We know that you have a lot of questions about what the future tax rates look like. You have a couple different options here. If you go to Greg and Kristen's website, you can actually do testmyretirement.com to get a true picture of what retirement taxes could look like. Also, there's a confidential tax map. What Greg and Kristen are offering you today is the opportunity to have that tax map drawn out for you. Do you know what your future's taxes could be in the future? You don't want to leave that to be an unknown, and you don't want to leave that necessarily up to Uncle Sam. That number to call, 614-336-7660. We have to take a very short commercial break, but I have so much more with Greg and Kristen when we return.
We know the market is going to get worse from here. This is the biggest monthly decline in 10 years. People's 401ks took a major hit.
Well, my investments are tanking. My retirement isn't going as planned. I can't believe I let my kid talk me into buying crypto. I mean, what is that anyway?
This was the fourth worst contraction in history.
So how are you two doing?
Your financial future doesn't have to be uncertain. I'm Greg Taylor with Legacy Retirement Group. If you've amassed a nest egg, it's time for a financial advisor to help you reach your retirement goals. This is one of the greatest tax windows in history. Now is the time to take advantage of this tax discount while you can. We specialize in retirement planning, tax mitigation, estate planning, and much more. Plan your retirement right. Call now for your complimentary portfolio review and tax analysis.
Welcome back to Winning Retirement Television. My name is Cynthia DeFazio, joined today by Greg and Kristen Taylor of Legacy Retirement Group. I have a very important question. Obviously, the market right now is so tumultuous, if you will. It's up and it's down and it's a roller coaster. A lot of investors are concerned right now. The changing market conditions, lower returns, there's more risk than ever. There are elevated risks. Are you recommending any sort of portfolio rebalancing, market allocation? Are you doing anything different right now?
You know what's interesting? The market has different waves, right? And there's always times where we feel like the market's invincible. We just want to jump on for the ride and enjoy it. And there's times like this where the market, you know, it had a time where it gave and now it's taking back. And so times like this, where we don't feel totally secure in what the market's doing, we feel like maybe we need to regroup and maybe we need to do some things different. But our motto, as a company has been plan smart, retire well. And we want people to have the confidence that they can retire in any economy. But there's a process that you really need to follow in order for that to be the case. And we call that the 3-bucket approach. But it's not just 3 buckets. It's a very simplified term, but in reality, what we're doing is we're taking all the things that are important to us about our retirement, the need for liquidity, the ability to fix the car when it breaks down, to put a new roof on the house, to replace the furnace, to take that random trip maybe that comes to your mind. And you have the ability to do that with your liquidity. And you think, well, where's the best place to have money for liquidity? In most part, it's the bank, it's the credit union, it's the money market, that type of account where we can get to it readily. We call that the sleep well at night money. Then there's income. And what we need to figure out is, okay, what do we actually spend to maintain our lifestyle?
Right.
And what does that take to generate that income? And so from our perspective, we want to use the absolute least amount of assets possible to generate the income people need.
Okay.
So whatever that takes, we want to do that. And so now we've got money in the bank, we have income we can depend on, then there's our growth bucket.
Okay.
And from there, we want to use the least amount of risk possible to generate the growth rate that you're looking for. Now, look, if it's in the market, stocks, bonds, mutual funds, those types of things, ETFs, all those things, alternative investments, there is risk associated with it. So now what we're trying to do is get the most consistency. We call that efficiency.
Okay.
And so when people come in, we want to test the efficiency of what they're already doing, see if they can improve it. We want to show them how they can really become most efficient with income using the least amount of assets, and then give them guidance on how much to keep in their liquid bucket. By doing those three, when tough times come,
Right.
you've got income to pay your bills, you've got money in the bank, so you have time to ride out market fluctuations.
Okay.
Here's the trouble. There's so many firms right now that are willing to put people's money at risk for income. In fact, we had someone that we recommended an income plan to recently. They emailed us back and said, you know, we really don't want to follow that plan, Greg, but do you have any other low-risk investment ideas? And I emailed them back and I said, you know, there's many advisors that are willing to put your money at risk that you need for income. We are not that firm.
That's true.
Because one of our core principles, Cynthia, is protect the income, grow the rest.
Absolutely.
And so that's how people can succeed in any economy, because they're not depending on that part of the economy to always be prosperous.
Yeah, those market fluctuations still don't feel very good.
No.
Right?
They never
but,
do.
But you know that you're still going to be able to take that income. Because, I mean, we've met with so many families over the last, especially the last 5 years, I'd say, that as they're coming in, they're like, you know, I've got to depend on a certain amount of money coming out of this investment, and it just dropped 20%. What am I supposed to do? That doesn't look too good or feel too good when I
No, it
look at my
doesn't.
account.
Right.
And so if you're methodical about how your plan is set up, although that doesn't feel good when those market fluctuations happen, you know you're going to be okay.
Sure. And Kristen, in your opinion, is it important for someone to understand the difference between the accumulation phase of life and distribution, especially when they're approaching the retirement years?
That is so important, because as you're working and you're, running the race, I should say, you're working, you're rushing home, you're making dinner, you're getting kids off to games, you're maybe getting the kids transitioned into college, and you're just saving as much as you can. Maybe you're paying off that last little bit of debt. You're saving and you're working, you're still getting raises, you're still getting bonuses. That is incredibly different than when you actually hang up the towel, so to speak, and you start distributing and paying yourself out of those dollars that you've saved all these years. It's a totally different ballgame. It becomes, you're almost like a business owner now, right? It feels like how we do as business owners. Every penny counts, everything you do matters, and you don't want to make egregious mistakes when you're in that process. So that phase in life is very different. And I think most families watching the show and listening to our radio show every week, they realize that, and that's why they're starting to make that decision to start looking at hiring someone to help them through that transition sooner than later.
Kristen, thank you. Well, Greg, you and Kristen have a very special offer to present to our viewers at home. Let's talk about what that is before we revisit the phone lines.
Well, Cynthia, in the whole scheme of things, part of the emotional attachment we have to our money comes down to that: am I going to have enough to last as long as I do? Am I going to be efficient with taxes? Is stock market volatility going to derail me? All these things that we talked about here. And having a written plan in place, to me, is vital. That shows you how to be more efficient with the money you have in growth, how to be more efficient with the money you're depending on for income, and how to be efficient with taxes moving forward, and understanding what that can look like. So I really believe that the toughest thing for people to really get a handle on is those three. What do I do about those three? So our written plan addresses all three of those. So if you pick up the phone now and you give us a call, 614-336-7660, what we're offering for you is that written plan, a written income plan, a tax strategy, that tax map and RMD report that we talk about, and then knowing how to make sure that the market doesn't derail your retirement. Having all that together in a written plan, I think, is vital. So give us a call or go to our website, legacyretirementgroup.com.
Greg, thank you so much. Kristen, thank you so much. To our viewers at home, that number to call, 614-336-7660. Or if you have your smartphone handy, go ahead, grab it, click on that QR code at the bottom corner of your screen. That will take you right to Legacy Retirement Group's landing page. We're going to take a very short commercial break. Don't go anywhere. I have a viewer question when we return, and here's a teaser. It's about precious metals. Stay tuned.
The work never seems to end until the day it finally does. After nearly a lifetime on the job, you should be rewarded for all the time you spent working. Whether that's crossing off items on your bucket list, learning a new passion, or rekindling the love of an old one. After all, life isn't over when you stop working. It's the start of an all-new chapter. The one where you're the writer and you get to choose how your story will go. A way to achieve that is by having a clear financial plan to sustain your golden years. The biggest fear most retirees have is if they'll have enough money to maintain the lifestyle they've always enjoyed. Having a plan to help protect you against the curveballs life often throws will help to maintain your lifestyle. Call today to get your free written financial plan so you may live every day to the fullest and enjoy the retirement of your dreams.
Welcome back to Winning Retirement Television. My name is Cynthia DeFazio. I'm joined today by Greg and Kristen Taylor of Legacy Retirement Group. And I love the part of the show where we get to ask the viewer questions, if you will. I get to ask you what the viewers are thinking at home. So here we go. Greg and Kristen, we've gotten quite a few information pieces recently about people wondering if they should be putting money into gold and silver, and will that protect the IRA as commercials proclaim? What are your thoughts? A lot of questions about gold and silver from this viewer.
Protect your IRA. Put your money in gold.
That's what the commercial says.
That's what the commercial says.
I was going to say.
Yes, no. Does gold or silver actually protect our IRAs as those commercials proclaim? Well, we have to think about what is gold and silver. They are simply commodities. They go up in price, they go down in price. They can gain value, they can lose value. What does that sound like? It sort of sounds like the stock market, doesn't it?
It does, absolutely.
It does. So gold and silver doesn't do any more to protect your IRA than if you have it in a mutual fund or if you have it in something else. Now, the only difference is if it goes down to zero, you're still holding a piece of gold, right?
True.
I mean, and it probably doesn't go down to zero, but it can definitely fluctuate in value. And so what you're thinking is, okay, let's suppose, because I get these questions all the time, well, what if the dollar goes away? What if they go to digital currency? And all these things that are on people's minds right now.
Yeah, absolutely.
With cryptocurrency and, all the things that have happened in regards to that, and people are just unsettled right now.
Sure.
Many don't trust the government, and I don't blame them. Many folks are they're just nervous, and they want something to make them feel more comfortable. But we had an investment summit a few months ago, and our chief investment strategist was in town, and so I posed that question to him. I said, okay, so many people have asked us this very question, and what do you think? He said, well, what are we going to do? We're going to take a piece of gold and shave it off to get some bread, and okay, we're going to go to a local donut shop and shave a little bit more off? No.
Great point.
Are we going to barter with gold and silver? Is that what it's going to boil down to? And at that point, would you rather have food or a piece of gold? Really?
I'm going to go with food.
Me too. I mean, it's hard to chew on that gold.
Exactly.
Well, and I think what it comes down to, Greg, as you're poking fun a lot.
Me?
As you're poking fun a lot, I think what it comes down to is noise, like the song Noise. There's also another song that our youth pastor put on our teen group's playlist called Static. And I thought it was such a good song. It's like clearing the noise that's going on. You don't worry about that if you don't watch people talking about that, right?
That is true.
It's not a thought that generally creeps up into your mind that, we're going to go to the gold standard and we're going to, do this, or we're going to have to start bartering for food.
Right.
That's a thought that gets put in our mind. And so what I immediately thought about with this question, not that this isn't a valid question, which it is, Greg's poking fun, but it is a valid question, is that we need to go back to the core goals that we have for the money we've saved. So what is the purpose of these dollars? A lot of times I used to say, do you remember, I haven't said this in a while, but we would sit down with clients and I would say, what was the purpose of this pile of money over here? And sometimes people just would kind of look at each other and say, well, I don't really know,
Yeah.
Other times it might be to leave it to my loved ones or to generate money for my retirement. And so realizing what it is we want those compartments of money to do for us answers the question of where we should put those dollars, right? So we're not in the business of just selling. So I could sell you this pen, but if you have no need to write right now, why would you want the pen?
100%
right?
agree.
So we want to know that we're using tools in our retirement that make sense for the goals we're trying to accomplish.
Sure.
And in regards to what Kristen just said, we lay out principles that we share with everyone when they come in for that first, what we call discovery visit.
Okay.
Because, we want to discover what's important to the folks that come in. So if you come in, we want to know what's important to you. We want to know what your dreams are, what your true goals are, what it's really going to take for you to live your lifestyle, and what all that means to you. We want to know that. But what's fair is for them to know a little bit about us too.
Absolutely.
And so from our perspective, we want people to understand the principles we're going to guide them with. And the first one is, we don't believe that people should make any investment decision unless it falls within the context of their personal plan.
Okay.
So therefore, their plan determines where they position their dollars. So if someone's recommending an annuity, for an example, and I had a family come in recently and they owned 3 annuities, and I said, what was your purpose for purchasing these? And they looked at each other and I said, was it for some income? Well, that was never mentioned. Well, in my mind, one of the big reasons to own an annuity is if you want income. They can be a great tool for that.
Sure.
And so I'll ask, why do you have this investment or that investment? And so really figuring all that out and laying out a plan that's purposeful. That's very, very important. Then next, we want them to manage risk efficiently. Then we want people to protect their income, grow the rest, and make sure that they're prepared for inflation, healthcare, and taxes.
So what it all comes down to is a proper plan, correct, Kristen?
It does. Making sure that what you've done and what you've been doing matches up with what goals you have and what you're trying to accomplish in retirement. That's all it is. And you can get started just by going on our website at legacyretirementgroup.com and scheduling a one-on-one discovery meeting.
Kristen, thank you so much. Greg, thank you so much. To our viewers at home, thank you for spending time with us today on Winning Retirement Television. That number to call is 614-336-7660. Be safe, be happy, and be blessed. We'll see you back 1 week from today. Take care now.